Hello everybody, more formally, and welcome to this webinar with ESA Business School, harnessing the power of cases to infuse sustainability into your curriculum. I'm Kate Cook from the Case Centre and I'm your host for this session. Most of you will know that the Case Centre is the independent home of the case method, and we are dedicated to advancing the case method worldwide. And along with our case workshops and our scholarships programme, our webinar programme is a key activity that we do to achieve this. This year it's our 50th anniversary and we've been doing lots of things throughout the year to mark this occasion. This includes an interactive timeline, and we've also just revealed the top 50 cases from the last 50 years. So both of those can be found on our website if you want to take a look. Then in November, we're launching an exciting new impact index. That's going to rank the schools on the impact of their case writing has had globally. So watch this space, because that will also, I hope, be a very interesting read for some of you. At the end of this session, we'll have a Q&A. So please feel free to post any questions in the chat during the webinar, and we'll pick those up again as we go through the webinar and at the end. We are recording this session, and we will send you a link in a follow-up email tomorrow. So you can either watch the recording again, or those of you that can't join us live can watch this session. And then we'll also put in there any links to any useful resources that may have been mentioned or asked throughout the session. We are delighted today to have Carlos Vergale join us. Carlos is a professor of finance at ESA Business School. He teaches corporate finance and real estate courses in the MBA, the Exec MBA, and the Exec Ed programmes. He has taught over 1,000 case-based sessions since he joined in 2008, so he has got plenty of experience to share with you today. So I'll leave you in his capable hands. Over to you.
Right. Thank you very much, Kate, for introduction, and Elizabeth for being here managing the session. Basically, well, first, if you have any questions, during the seminar, the webinar, feel free to ask through the chat. I would like first to know where you guys located right now. So if you can put in the chat, where are you located, and so then we get all used to the chat as well. So if you can put, I'm in Barcelona, so I'm gonna put, I'm in Barcelona, Spain right now. All right. Good. So people from many places, right? So basically the goal of today, we're going to talk about how to introduce sustainability into your courses through cases, right? Sustainability is a very hot topic nowadays, and we need to know how to use it in cases. Usually what people do, right, which is the easy thing, is like, hey, there is a new topic, let's put a lecture on it, right? Let's put some slides together and let's have, a discussion over a lecture, right? That's not what we are going to do. So the goals of the seminar are going to be, first, to learn the significance of sustainability in today's curriculum. Then we're going to explore how to choose or to write cases that address the current and the relevant topics for the students. We are going to also discover how to harness the potential of a timely case using innovative methods. Okay, we're going to use the shell case as an excuse, basically, to show this. We have a timely case. We have to use innovative methods, and something we're going to learn is that, well, we need to put it in the curriculum of a course as well, right? So we don't want just to have a case that doesn't have anything to do with the course. So we had to identify the outline and the types of questions that we can ask in the classroom with the discussion of the case. And we're going to use the shell case for that as an excuse, and we're going to have a Q&A session, more open session. So if there are any clarifying questions, we can have them during the session. Otherwise, we keep them and we discuss them in the Q&A towards the end. Okay, so we have, as humanity, we have many challenges, right? In 2050, it seems to be a very big year to address a lot of issues related to climate. There are climate goals for 2030 and 2050. And so business people, right, are worried about that. Managers need to tackle these type of issues. And we need to, as educators, right, as people in academia, we need to address these issues, right? Something that I think it's very recommended is that you don't try to address these issues by yourself. So something we do at ESS, we have this Institute for Sustainability Leadership, right? This is a new initiative that we launch as a center of excellence to put together research, basically the academic part, the teaching part, like cases, and that's here where this case fits in, and then the policymakers and community leaders and managers, right? So that what we call the industry, right? So the center like this facilitates this exchange of information and this development of new cases in this case, but also and research papers and sessions with practitioners. I think this is interesting because if you try to develop the cases on your own, the quality is it's way more work, and the quality usually is not the same when you can test it using your colleagues in a center like this, right? So basically what we're saying, right, we have academic research, so we had to put things that are very new, so we need academic research to put it together with publications, events, and teaching like the cases, and to share this with corporate leaders that they are in the younger side are our students, of the undergrads or master's level, and going up to top executives or basically leaders in the society as well. Okay, so we're going to use this case of Shell, right? This case is already published. I'm going to point out one of the first takeaways is like, well, you don't need to, if you want to tackle sustainability, this doesn't have to be in a course about sustainability and in a topic about sustainability. You need to create a department or a group of people that only does sustainability. Actually, the center on sustainability I was telling you about, it's cross departments, right? Everybody is involved there at ES in different departments. And this specific case of Shell, it's about green finance and the sustainability challenges that Shell is facing now. And it's a part of it's a finance case. It's a finance, accounting, if you want, case, but it's more like a finance case. It's also relatively short, right? It's 15 pages. I point this out because, right, we're talking with Kate earlier today, right? The length of the cases, right? It's really important nowadays when people has, these spans of like, not gonna read, cases that they are too long when I have to prepare, several cases per week if I am enrolled in a program at a business school, or basically had to read things that they are not very, very relevant, right, or very important. So these are the cases that try to go to the point and try to get the topics in these cases like green finance, right, sustainability, sustainable finance, sustainability, governance, activism, valuation, and cost of capital, right? So we are going to tackle all these issues. The pedagogical objectives of this specific case are first to learn how sustainability issues might drive investors' demand. Okay, so we're going to have to make a decision here in this case, and this is driven by sustainability issues, which is pretty new, by the way, in the business world. And second objective is, well, we're going to help students realize the importance of activist investors, and we had to make decisions as top managers. So we're going to put the students in the shoes of these managers, that they are pushed by activist investors to make an important decision related to sustainability. Another goal is to basically identify the advantages of disadvantages for all the actors involved in this case of splitting the companies into two. We're going to see what happens here. If some of you read the case or know what's happening with Shell right now, but there are activists that they are pushing to split Shell into two parts, right? The green Shell and the brown Shell. And well, there are pros and cons of doing that, right? And this is something it's one of the goals of the case, basically identify what are the good and bad things about that. Also, we want to provide the basis for a discussion about the roles of the different parties that they are involved here in this investor proposal, and also to properly compare the viability of splitting companies, because this is a finance case, right? We're going to calculate the valuations of these two different companies. Okay, in general, I recommend this. I was saying before, like to have, even if you introduce a topic like this, sustainability in a case, it could be ethics, it could be any other topic, any other challenge that it's, in the business world, to put it in not as a sustainability case by itself, but a case that it's involved, in this case, into finance, right? There are finance decisions and sustainability matters. Let's put these together and let's discuss a case like that. So this would be the outline that I set up for this case. Okay, so you will have, if you go to the website, you have the case, right? You have a teaching note with all of this, so you don't need to take notes now and write like crazy or take a snapshots of this, because it's all in the teaching note, so no worries, right? There is an Excel in the case with all calculations you can have for the more finance people if you want to use this case from a more financial, more hardcore finance, let's say, point of view. But this is a case that it can also be taught more from if you want, from a soft and less numerical point of view as well. Okay, so you have all the information, the case, the teaching note, the Excel, so you don't need to be taking notes about this webinar, right? So I will start usually to motivate. Let's talk about the business analysis first. Okay, so that would be, this is a potential outline for the discussion. Something like this, I will start with a potential. Let's talk about the business analysis. What is that? And this is based on other cases that I teach. So I put the case of Shell, in a series of other cases. I always ask to warm up the session. What is Shell doing, right? And you had to tell me, and then you cold call people, right? And then you put them. You give the message here. This is serious. We're discussing a case now. So what are these guys doing? And then you call somebody, and they tell you, Shell, which is a company, it's an energy company. That's what they're doing. Okay, good, quick, right? What is the strategy of Shell, right? Strategy means who are the clients of Shell? Why are the clients of Shell buying from Shell, right? And then here again, right? You ask them, what are they doing, right? And why the clients buy from them? What is the corporate structure right now, right? The case talks about that. And briefly, but I can say this is the company, an energy company like this has this corporate structure, and who are the people at Shell? Are these experienced people, right? This is a company. In this case, people, we're going to see that's very important. I like to focus and put a lot of emphasis on the people in the cases, right? Shell is not an abstract entity, right? This is a company made by people, and people run the company. And these people, we're going to push this later in the discussion, but the different people might have different incentives here, right? We have here, a lot of know-how that has been developed for many decades for Shell, right? How to deal with energy, right? We have here, for example, if you want to bring it to the extreme, we have engineers that they are, top-notch engineers about oil refining, right? And being very efficient with processes that they've been developed by decades, right? What do we have to do with these guys now? Right? We have to just, the world is about being green, and we don't want these people anymore. This know-how, no, right? So people is important. So you can start, motivating the business analysis with something like that, right? With the what, with the strategy, with the corporate structure, and the people. And then if you want to go to more specific questions, it is good to start a case like this with, what's your opinion? Okay, Shell is doing something already. They have what they call this energy transition plan, right? The case talking about that. They say they want to reduce the fossil fuel pollution. Is this feasible, what they are asking, what they are doing, what the plans, are their plans feasible or not? Can they improve the public opinion by doing that or not, right? And because we are in business and we have to do numbers, right, as well, and we have to understand the numbers, we look at the financial statements. Are they doing well or not? Because if they are not doing very well, probably they're going to focus on very short-term issues and not long-term issues like the sustainability points that we have here on the table, right? So these are questions that tend to start, focusing more on the business analysis. You ask to the opinion on something that is not very clear, and I think it's something a short advice that matters here, but you can use it for all the cases. Like you have to ask always questions that where the answer is not strictly clear, right? maybe the first one, the what are they doing, and so just to warm up and to get the attention of everybody, okay? But now we have to get into a discussion, right? Is this energy transition plan feasible or not, right? This is being approved by the board. This is being set up by the management team. So it means that, I mean, this has gone through several layers of governance, and people basically, smart people has approved that. So it probably makes sense, but is it good or not? Because then we have activists that they come here and they're questioned, right? And here is where you can set up this, no? With this business analysis, that would be a good way to start with, right? When you start talking about evaluation, well, you can show this graph, which is the first graph in the case, right? That it's to motivate also the discussion, right? If you were an investor, would you be happy about Shell, right? If you were a current shareholder, what do you see here? Well, look at what happened if you invested in Shell in 2018, like right 3 years ago. You bought shares of Shell, and if you bought, the S&P 500, right? A portfolio of the S&P 500. So basically, right, the S&P 500 doing way better, quite well, right? The S&P 500 compared to Shell, or compared to the S&P 500 integrated oil and gas, right? So basically the composite of oil and gas companies, right? So Shell not doing very well compared to their peers, just a little bit worse, but even compared to the S&P 500, way worse. So, well, should we do something here or not, right? And this is where you come, like, the point of the activists. And then you have a good discussion that you can enter here about activists. This is, just a snapshot, like basically just to show that this is important, the world of the activists. You can use these type of rankings, or you can use anything else, right? So you have here, basically it's telling you is like, what, this happens both in the US, this happens both in the rest of the world. Shell, basically the activist campaign on Shell that's driven by Third Point, which is the case that we are discussing today, right? This is one of the largest that started in 2021. But there are many in the rest of the world, in many countries, right? As you see here, well, they appear countries from all over the place, right? From the Netherlands to the UK to Brazil to Japan, right? So you have any places all over the place, and then you have also campaigns that they are in the US, right? All of these market caps that they are very large, right? Shell very large, Exxon, another competitor, very large, but they are all over the place and they are large. So something that also shows that the case is relevant, that this is a case that it's basically of a current issue. And now we have activists that, till a few years ago, they were questioning the activists because they were doing things that they were very short-term minded. That's what some people were doing. And then they are trying to extract cash from companies, and they are trying to get returns or stock returns in a very short term. And now you have activists that they are pushing for green, right? You have activists that they are pushing for sustainability, like Third Point with Shell, right? So this can open a big discussion of, well, are the activists good or not, right? This is something that can be part of this case as well. If you don't want to focus it that much into the finance part, right? You can focus it also on the role of activists and investors towards green, all right? So that would be the business analysis and setting up of the case. One important point here, just to focus, this is a case, right? So we are not here to discuss just general things. Like, there is a proposal of Third Point. Third Point is the activist, right? Basically, Third Point bought some shares from a Shell, and now they send a proposal, right? And the proposal is about doing a spin-off of the company. So we have Shell, right? And we're going to split it between the green Shell, right? So some assets and liabilities are going to go to the subsidiary green Shell. And well, that's the way to establish it, right? We're going to have a subco. And they are the Shell shareholders here. And they are going to have the shares split between the brown and the green Shell, basically. And if you own, some Shell shares as a shareholder, you're going to end up with two types of shares, right? Basically a typical spin-off of a company. Okay, this is also opens the discussion of, well, is it better a company separated or together, right? It's we've been telling our students during M&A courses, right? And when you talk about mergers and acquisitions, right? That two companies that they are separate, you put them together and you create value, right? The famous synergies. We talk about synergies, right? And two companies together, they are worth more than separate, right? And now here we're saying the opposite. We are saying that two companies separate, they are worth more than the one together. Now, what's going on? So they also, you also have here a debate about how to unlock value in corporations, and we've seen many cases of M&As, right, in the in the world, but we also seen spin-offs. So this is a case also that through sustainability, you are telling, well, maybe the world and Shell in particular is going to be better if we split the green part of Shell and the brown part of Shell. Is this true? Well, this is something we have to discuss. Okay. So about the spin-off, then it's a good point to, if you use the board, I like that, I use the boards a lot. So now we are doing this session, this webinar with the slides, but in class, I barely use slides, and I use the board all the time. I tell them I'm the secretary of the session, and then they are the managers. So I just write things that they say. It's good to write, to get a board or two boards, one for the pros, one for the cons, or you get one board, split it in two, and you start putting pros and cons about the spin-off. That there are many. The case discusses, there are some discussion about some of them, right? If you go, there is the proposal, the viability from shareholders' point of view that the CEO and his team put together, right? This is in the case already, but there are other things that you might think, what are the good things and the bad things about a spin-off? And then you create here a good discussion, because you always have people who are like, there's saying, yes, I'm for this, I'm against this, and well, this is actually a good thing. And the good thing is also, as a good secretary of the meeting, right, you keep these notes there, right, and you keep the board. You got to come back to this type of board later when you go to conclusions, right? Then it's like, well, you cannot tell me that's for a super yes or a super no, because we said, that there were good things and bad things about it, right? So you can debate about the spin-off. This creates usually a very good debate when you talk about this, because people get very engaged, right? We're talking about sustainability, we're talking about the environment, we're talking about the future of the planet, but also about the future of mobility. We're talking about the future about energy in general. So this is, and people get very engaged with that. And when after going to the third point proposal, if you want to give it either if you want to give it the finance spin or not, I think it's good to talk about valuation, because in a case like this, the valuation it's very important. If you do it within a finance course, no problem, or accounting, right? But if you do it through a strategy course or a course that it's more general, like valuation is also going to be very relevant, because this is a case where they are saying, well, the Shell actually, right, together is worth less than separate into a green and a brown. And why is that? And then we can start. Well, we have two ways to value companies, right? We can value companies through multiples, or we can value companies through DCF, and then we can look at ESG and green finance. Okay, so if you look at multiples, well, the case also provides, a list of companies that they are, that they could be comparables. Okay, we can have that, and we have and with the case is also available. If I mention it, there is an Excel available that you can play with these numbers, right? And here you have a list of things. That's what an analyst would do. Let's look at the brown side, right? What is the brown side? Companies that they use fossil fuels, okay? And let's look at this. What happens here when we look at, you look at this, we put a list of companies together, and we look at the average EV/EBITDA, right? One multiple that it's widely used to value companies. So the average EV/EBITDA, enterprise value EBITDA, is 616. Okay, so basically we pay on average 6 times the EBITDA of these companies, and that's the valuation that it comes out of all this. One question that you can ask here: any companies to drop from the list, right? Because this is typically when you show and a list of companies, like the one we have now on the screen, right? People is like, well, but this company is in Italy, right? So the company in Italy, maybe is not comparable to it, then we delete it. Okay, what else? Well, we have this company that is in China. Well, in China, also delete. And then you start, well, we can discuss, which are the companies that are really comparables because of country, because of market cap, right? We have Shell, which is pretty large, right? So maybe companies that they are not that large down here, we also should disregard them, and so on. So you can have a discussion on what is comparable to the Brown spin-off of Shell, right? And then if you adjust this 6.16 might go up or down. It depends on what you consider or you don't consider, right? So this is a debate you might have. Then you look at the Brown. Let's look now at the green side. What are green companies? Well, green companies are renewable energy companies, companies that they don't have or they mostly don't have fossil fuels. It's all about renewable energy. Okay, and so you put all this together, look at what happens, right? The EV/EBITDA of these companies is 20 times, right? So EV enterprise value, right? 20 times the EBITDA. Right? Remember the one before was 616. This is 20 times. Well, maybe it makes sense to split the company in two, and instead of having the EV/EBITDA that you have now, the average that EV/EBITDA or that the Brown companies have right now, right? If you spin off part of it and you can put a multiple of 20, maybe you are creating value, right? How much value? Can we do a quick valuation of that? And we can spend this, as we are doing now, a couple of minutes or a few minutes on that, or we can go more into that, okay? Again, any companies to drop from here, and we can see, because here we have companies with very, very high EV/EBITDAs. These numbers are these companies like Siemens, Gamesa in this case, these Spanish companies driving the numbers up. So this will be a discussion we're gonna have. Like these guys are, really comparables or not. And then if you have any experts in the energy industry, right, in the classroom, yeah, you can basically have a discussion on that. If you have the Excel open in class, which I do sometimes, right? This Excel has, you see here, this on the right-hand side, I had this included. Yes. You can play with it and put. Yeah, if you delete this once here in the Excel, right? The EBITDA multiple adapts, adjust to the inclusion or not of the company in the list, and then you can you make it a little bit more dynamic, and you say, okay, if I include this company or not. But at the end of the day, in this specific case, whatever you do, right, the average EBITDA multiple is going to be way higher for green than for brown. This is something that a few years ago didn't happen. Right? Also brings you the debate to say what has happened recently in the financial markets, that a few years ago the brown side, let's say, and the companies that they were using fossil fuels were seeing as a as a company that was producing stable cash flows, very safe, to invest in this company, very low betas, if you think in finance terms, right? There's a company that was, very good to invest in because it produced very stable cash flows. And now we see this company as the low value, more risky side. What has happened here? Yeah? And this brings also, right, the debate into something that is not, let's crunch numbers, right? Let's think also what's happening in the world, that it's changing the pillars, let's say, even of financial valuations. Okay, when you look at the valuation of the green and the brown, right, we can do a quick, back to the envelope valuation, and with these multiples, the 616 I was telling you about, and the 2080, and then we can do this, and this is the stock prices that we get. Okay, 32, right? And here is, we have it in US dollars and British pounds, right? But the Shell price today is, if you look in dollars, it was 22 at the date of the case. And then you look at the valuations just of the brown, so it's already doing worse related to the brown. But if you look at the green side, right, the price should be 127, right? So for being together, green and brown, the price is 21. That's 22. That's the one that we see in the markets at the end of 2021. If we do our valuation separating brown and green, right, the values are way higher, especially for the green side. So, somebody, right, a rational investor would say, well, let's split the company, right? That's a no-brainer, right? one thing, if you want to do this to conclude for the finance audience, is like, what is your opinion on this valuation approach, right? Is it good to compare? These are the right comparables? What are the issues here? Do you think that the markets are pricing this the right way, or there is a hype in the green side, no, with green investments, right? Is this greenium for sure, or not? Or there is this again? There is an overvaluation of this type of companies. So this is a debate that you can have here, but now you can have it basically based on numbers, right? Because in the case you have all these comparables and some metrics of the different comparable firms as well. Okay. Well, this is the valuation, right? Now we do at stock price, right? That will be the valuation with an enterprise value number, right? With billions, right? And then you have the current shell before, and the current shell. It's before the splitting, right? It's 302 billion, okay? And then after splitting, it's almost 600, right? So, well, if you believe on this, right, that the green part, you can push up the value just by splitting it, and taking the brown part out of the green, but the value should go up. So in terms of finance, right? And looking at the valuation methods, right, the value should be much higher. And this is what you create, right? Before 300 million, right? After 591, out of them, right? 400, more than 400 billion, it's about the integrated gas and renewables, okay? Another point, if you want to bring the case too much into finance, is like, well, should we introduce or should we put integrated gas into renewables as well, right? Which is another debate. How green is gas, basically, right here, or should we split it as well? So far they are putting it together, but what if in the near future, right, we consider that gas is, well, as pollutant, let's say, as oil, right? Because this is the value here, it's very high, and the rest is the brown part, okay, of Shell, which is basically the oil, fossil fuel energy. Okay, so well, we've seen this valuation. Now we could focus on the effects, of this on financing that has all of this separation between the brown and the green. Do we have green financing? And here you can introduce now, if you want, this is a good moment to introduce ESG ratings, right? Introduce green finance and say, okay, why these multiples are way higher for green? Well, because they are investors that they are worried about ESG ratings, right? They are ESG factors that help investors to assess the company. So they look at the long-term sustainability. There are ethical practices as well that they are linked to some factors that they are ESG, right? E for the environmental impact, S for the social responsibility, G for the governance, and these ratings are high, way higher for the green part of Shell than for the brown part of Shell. So then say, well, maybe one of the reasons why the green part is worth way more is because you can attract some investors that you cannot attract to the brown part. Okay, and this is a change again that you can be discussing during the session. What has changed in the financial markets that a few years ago, right, everybody would see the brown company, green and brown together, right? Everybody would see Shell as a very safe company that produces stable cash flows, that is going to be here in a very long run because they have, they produce oil that it's on the ground, and they have oil reserves for decades, so they have cash flows for sure for decades. And something was very short, and lots of investors were willing to invest here. Now these investors, they don't want to invest here anymore. What has changed, right? Why this ESG is looking at the long-term impact, and this is actually how much, again, of a hype there is here or not, or this is something that is here to stay. Okay. As mentioned, right, that the high ESG ratings can make a company more attractive to investors, can improve the access to capital, and can improve the pool of investors that they can become shareholders of a company like Shell. Examples of ESG rating agencies, because we always like, well, this is, this has been here for already a few years at ESG, but people always like asking, like, as to where can I get these ratings? Well, MSCI, Sustainalytics, Refinitiv, etc. So you can have access to these rating ESG ratings as you have the credit ratings of Fitch, Moody's, and S&P, right? And these ratings for Shell specifically, they look at something like this, right? You have the sustainability ratings of different over different scores that they have, and here you can discuss also, like, well, this is what these guys are telling me, right? We have a combined score of C+, which is not that good, okay? But, well, look at here. I see a lot of greens, A+, A on environmental pillar scores, right? The social, the governance pillar. So this is all very good, right? There is a measure that they have on controversies, which is bad, right? But if you look at this as an investor that only looks, things from far away, right? Doesn't want to get into the details, it doesn't look that bad. The ESG rating of Shell, right? So this also brings to the debate, right? How you can trust, these ESG ratings. Are the companies doing, greenwashing or not? Are they basically willing to pass the ESG rating exam, and that's why they get good ratings here or not, right? So these are things that it could be debated in the class, because this could be that basically the third point and the activists in this case, they are exaggerating. They are saying, well, these guys, they are not green enough, but Shell has a plan, right, to become green and to do a transition, and that cannot be done in 1 year or two, which is usually the horizon of investment of an activist, right? So, well, this brings you a debate. I think it's very interesting and very new, right? About the ESG ratings, how are they created and how they put them. Why do companies invest in ESG, right? You can bring also things when you are talking about this, about the debate, right? Again, these are surveys, no? But well, one of the things you see, who's putting pressure on ESG, you think it's a lot about investor and shareholder demands, the increase in society, and even the employee activism. Okay, there are climate disasters that they are on the rise, so people get very, very aware of that. Okay, but there are many things, right, that they are driven by investors, right, by society, and then we are managers that we had to decide, if we should push for this or not, or until what point, right? So the companies invest in ESG because many reasons, right? But you can see, right, government action is down here, okay? So I'm saying that because a lot of people say, oh, I invest because the government is pushing. No, it seems that the demands up here, when we talk about the shareholder demands, what the impact that it has in the people is way higher than others, or even competition, right, among companies, right? People invest on ESG, right, because basically the financial markets push for it, the investors and the society. Okay, then you can talk about the green as well. If we want to focus a little bit more on finance, right, there is a green premium. What is the green premium? Well, there are lower borrowing costs for the issuers of green bonds compared to conventional bonds. Basically, you can borrow at a cheaper valuation, okay, at the cheaper values, at the cheaper interest rates. You can borrow. What is the effect of it? Well, if you are in a finance course, you can justify very easily, right, that the discount rates are lower. So if the discount rates are lower, your valuations go up, right? So how much is that? Well, this is something also to put on the table, right? How much? What are the factors that they contribute to this, right? The demand for green bonds, the regulation, and you can here have also an interesting debate, or bring other cases on the table where basically it's the investors who are pushing for it, like this case of Shell, or is a regulation issue. We have many cases on where it's the regulation, right, side, the laws, especially more in Europe than in the US probably it is, right, where the regulation goes ahead and force you to become more green. Okay. So for example, we're going to put an example of greenium that it's an early example. Already in 2017, right, Apple issued 1 billion of green finance, of green bonds at a lower yield than the bonds that they had out there already in 2017. So this has been happening already for a few years, right? And if you talk about greenium, that would be this. No, we have the credit risk. At a certain risk, we have a yield, and the risk-free rate always below the yield, because we are in a project for Shell in this case, or for any, right? That it's going to have more risk than the risk-free rate, but the green bond provides a lower yield. So it's a lower interest rate, and that's different. Is what we call the greenium, right? It's the premium, negative premium that comes from the green side of the investment. Okay. Then when we talk about valuation and the ESG and green finance, we can talk about other criteria, which I think that these are the interesting part. So other criteria will be, well, we have to deal with a transition to the new economy. Okay, we have to go to a green economy, which is the new economy, right? And there are issues out there that I think that they are very interesting to bring into the debate, especially when you're talking to managers, also to the young and to the new generations, also to the undergrads and the masters, but even more to managers. Like, well, we need to do a transition to a new world, a new economy, a green world. Everybody agrees with that. The problem is how, right? And here is the debate. How can we do that? Do we need to push or not? And at what speed we need to push, right? We cannot go from the energy sources that we have now to the ones that we need in 2050, right? In 1 year. How can we do that? So one way, and part of the debate here, it's, well, we could do this, for example, in the case of Shell, where we could do the split green and brown. Who keeps the green? Who keeps the brown? Right? Everybody wants the green here, right? The green, yeah, let's keep the green, as a public company, trade in the financial markets, super transparent, right? With all the highest ESG standards, so on. What happens to the brown part? And I think this is the big debate. Who's gonna own the brown part? And this is a controversial part that can bring to these very uncomfortable questions that I like a lot in the class, okay? Which is like, well, private equity or we keep it public? If it's public, who's going to invest on that? Because we've seen all these funds, nobody wants to put the money into a company that, right, that is going to be disappearing over time because it's based on fossil fuels. So who's going to own this company? A private equity? From where, right? Who's going to lead this transition if we hide under the rug the brown company, the brown Shell, but also the brown Exxon, but also the brown BP, and also the brown name it, okay? And this brings the debate of this is a problem about society, right? And we are managers of companies, we are investors, but these are issues that they are relevant, and the decisions that we make as managers, even if it's in a company, right, this is going to have big effects on society. We need to design a transition in this case that's going to have an effect at a global scale overall, and well, it depends on what we do. Right? This is going to change our world. So I think these are the type of questions that they are nice, no? Because we went from things that are very specific of Shell, valuation that is a very technical issue related to finance, right? The multiples, the EV/EBITDAs, and now we go to a point which is like, well, we're talking about how do we manage as humankind, no, transition in the energy industry, right? And then there are issues related to corporate governance as well. I make you think like these are a set of news that they've been out there this year already, right? If you look at in the first quarter of the year, many things: investors backed legal petitions against Shell directors over climate goals. So if you are a manager of a company, you might have investors that might sue you, right? Because you are not doing your job very well. And you say, okay, you think that you are being, very good for the environment, pushing in the right direction, and you probably are, but probably you are not pushing enough. Somebody would say, and you have responsibilities here, right? And you're gonna have, so basically you are exposed. Back in the day, you will be more exposed if you are a top manager of a company or a CEO. You will be more exposed to things related to the performance of the company, right? The financial performance, if you are doing well or not, and then you're going to be, replaced or dismissed, right? If you are not doing well in terms of performance. But now we have, other things, no? We have things related to climate litigations, right? Claims over climate risk disclosure. So many things related to the sustainability, to the climate, that they affect you as a manager as well. So this is a topic that you cannot overlook at all, okay? Another thing that it's interesting to bring in the case, I don't know if exactly in this order, you can bring it before, it's a role playing, right? There are a lot of corporate governance issues. I put it here in the webinar now because I think it's interesting, like, to look at this debate. What happens, you have different stakeholders here, right? We have third point, this is the activists. We have the reasons, right? Very well stated in the case. We have the shareholders, right? They bought shares, they want the value to go up. We've seen that the price hasn't gone up as the S&P 500 and other comparables. And then we have the board, right? The CEO, the directors, we have the manager of the company, right? This the board has one of the goals is to maximize the value, right, of the company for the shareholders, right? They get money in exchange. And third point could be doing a friendly takeover or a hostile takeover, right? And here we could discuss also what are the issues of doing one thing or doing the other, right? There are anti-takeover defenses that companies put into place, right? Poison pills, stagger boards, right? Golden parachutes, right? These type of issues are related to governance. So you can also bring, if you wanna teach this case in courses related to governance, well, you have these issues as well, right? You're talking about sustainability and you're talking about discussing about the corporate governance issues of these type of things. And it's very good to do a role play. So sometimes what I do in the classes, I separate the class in three, right? The way they are, right? Now you are the shareholders, now you are the board, and you are the activists. And put yourself on the shoes of these three players, and let's have a debate. Why are you doing that? What are you pushing for? Why are you pushing for this? And what will you do when they tell you this, right? So these are the type of discussions that are very nice to have in class, okay? And finally, every case needs to have a decision, right? So I think it's very important not just to leave the case, oh, it's time, we need to go, right? Goodbye. No, it's good even to start some of the discussions, previous discussions, keep some time. And then again, you are the secretary, the assistant of this meeting, this very important meeting where you have to make a decision. And we don't leave until we spend a few minutes, talking about the decisions, right? And here the decisions that you can put to close, right? These are the type of questions that you put in the preparation sheet before the case. It's like, well, we have a shortened decision, right? There is a friendly or a hostile takeover that we can force from third point, right? We can go friendly and say, well, we agree, we have to push for, all these demands that you put related to the green transition, or no, or we go and we fight, right? We could go and fight, say we don't agree with you, right? What do we do, right? So this is an important decision. And second, what do we do more in the long term about this split with the green assets? How do we split that? Do we keep part of the brown assets within a green company because we have the know-how of the engineers that they know about energy and so, or no? What do we do, right? So these are the decisions that we can basically, we should close the case with something like that. Okay, so this is what is happening. It's also good, to see what happened with the company, right? In the past few years, the share price actually went up a little bit. And it's good to see, when to put the company and the decision into perspective of what happened after. Okay, so just to conclude before we head to some questions, takeaways. We need good cases that involve not clear decisions. I think in terms of sustainability, this is a good one, because at least to me, and I taught this case many times in this past year, and the discussion goes, to different places, depends on the audience, right? It's not clear, right, if you want to split this or not, if you want to fight against the activist investors or not, right? That's good case, right? That you can split the class. No? It's very important, and just for that, to introduce current and relevant topics in the cases, right? In this case, sustainability, with no clear decisions. Then you can discuss the pros and cons of the decision, the structure of the deal, the valuation of the firm in this case, right? If you are creating value or not, you can do it more formally as we did here, with the valuation in financial terms, or just talk about value creation. And then interesting to talk about people as well, and the conflicts of interest of the people, boards versus shareholders, for example, right? Activists, right? We want friendly or hostile takeover. What are the incentives of the board? They want to stay in their jobs, or they are doing the best in the interest of the shareholders, right? What are the anti-takeover defenses they want to get? So basically putting the people at the center of the decision. And important also, the takeaways is, well, we need to bring at the end all of these to big questions. Right? What are the effects on society? Right? And then people get more engaged into this, right? I'm not into finance, I'm not into sustainability, but I see that this is a very important case for society. And this is a very important topic for society as a whole. Okay. And with this, I think, if you have any questions, comments, suggestions, complaints, I don't know.
Thanks, Carlos. Yes, we've had a couple in through the chat, so I'll just get started on those. Athena and Jonathan had some practical ones about the case. So Athena asked, what is the source for the financial results of the major renewable energy companies? Because the case exhibits appear to have the data for other oil and gas firms. So I think she was wondering what sources you used for the case, which obviously will be found on the case. But yeah.
Wait. Can you say it again? I didn't.
What is the source for the financial results of the major renewable energy companies?
Yeah. So basically, we look at publicly traded companies, okay, and we get public sources. They are public sources, but they are data stream, right? They are Bloomberg, so they are I won't say free, but they are public sources of public data, basically, because they are public companies. Okay, and we put them into, nicely. The problem here was basically make it homogeneous, right? So we can compare, all the companies in the same way. And the case again was not. This is not a case to do to learn how to do valuation. Let's say, right? That's not the perfect case. I would say this is a case where you say, okay, knowing that there is, some valuation methods, right? Here is where we can do with comparables in a very simple way.
Fabulous, thank you. Somebody else has asked, companies doing not so sustainable practices often won't allow access for a case writer, or they try and greenwash their actions. How would you combat that when writing a sustainability case?
So, well, it depends if you want to make this the central point of the case or not. Listen, I always like to have numbers or data to justify this. Like, they tell me what is greenwashing, right? And there are many recent studies that they look at this, right? At companies. So for something I would do is to bring this. There are articles in like academic articles that they look at the ESG ratings, and they look at, for example, real emissions of companies and their customers, and they look at how much of this is greenwashing and how much of this is real. Okay, and they are studying that. So I would do is to bring this into the discussion. Well, we can talk about greenwashing, but it's not true that everybody does greenwashing, and it's not true that nobody does greenwashing. How much of greenwashing is out there, right? And I think it's interesting also, before even showing results of the studies, is that you ask to the class, no, how would you measure greenwashing? What is greenwashing for you? How do you measure, right? And then later you go to to studies done by people who have spent many hours thinking about that and dealing with the data. But it's a great question, because it's, people, we are all worried about this. No, we don't want to, when we see ESG ratings, when we see companies doing things right for the environment, we want to make sure that they are doing that, no, and they are not doing washing. So it's a topic that's very important, but we had to have ways to measure this. Okay.
Thanks. Mohammed has asked, and it might be something you've done, but he said, could we also link our evaluation to the SDGs as well?
Yes, again, they are new, but these are very new. That's the good of having a very new topic, right? That and having and discussing a case with a very new topic, because you have news all over. You have news about what's going on with Shell now. What's going on with other competitors of Shell. What's going on in the industry. So you can bring news into the classroom, and there are new studies as well. So there are studies coming out like very recently about the effect of ESG ratings on stock valuations. Right? And what happens when a company gets, like an upgrade on ESG to their stock returns, right? And say you can measure this. How important is this related, for example, with response or compared to credit ratings, right? Or compared to other type of measures of performance of companies. So now there are studies on this, and I think again, this is very. You can bring this into the classroom as side comments. Again, I don't like to use slides that much. I like to use, boards most of the time, but these type of facts, they have to be in a slides. I'll say when you bring data, it's like, we don't, the data, we don't discuss it. Okay. Or this type of, survey, results of the survey, or this effect of ESG ratings on a stock price. This is the results of this paper published in this top journal, right? Boom, you show it, that's it. This is not to be discussed. This is data. Okay. Now let's discuss the implications of this, right? So for example, if I'm a company, should I be pushing for better ESG ratings? How? Because this is expensive, right? You might be doing many things, but then, like your board members, you're representing your shareholders might say, well, we are not willing to spend all this money investing on all these, investments to perform better in ESG, for example, right? So these are things that, well, we can discuss the how, right? But we cannot discuss the numbers and the data here. Again, it's good to have these type of papers, on the background, and use them when you need.
In fact, Jonathan, who's in the audience, has actually written one of those papers. So he's put the link in the chat. So if anybody wants to take that link before the webinar closes, we've actually come to the end. We've got no more time, I'm afraid, for any more questions, but grab that link if you want to out of the chat from Jonathan. Thank you for that. And just to say thank you very much for joining us all today. We hope you've been inspired to bring the subject of sustainability into your classrooms through case studies. Thank you, Carlos, for a really interesting session, and thank you for allowing us to explore your Shell case further with you. We'd love to hear your thoughts on the session today, and Zoom, when it closes, should open a link to a feedback form in the browser window. So if you could just spend a minute doing that, that would be great. The link will also appear in the email that we'll send out tomorrow, and the link to the recording will also be in the webinar. Will be in the email tomorrow. Sorry. Thanks to Carlos. Thank you once again, and thank you to everybody for attending. And have a good rest of your day, wherever you may be. Thanks so much.